Did you know that $65 billion was lost in the largest Ponzi scheme in history? A chilling reminder of how destructive these schemes can be. Ponzi schemes, by their nature, are inherently unstable. They rely on a constant influx of new investors whose funds are used to pay returns to existing ones. The problem is, this model isn't sustainable. As soon as the flow of new investors slows down or stops, the scheme collapses, often leaving investors with massive losses. Yet not all Ponzi schemes are as obvious as you might think. Let's talk about X-Bonds. X-Bonds, a company shrouded in mystery. No information about its ownership or management, yet it promises sky-high returns. This London-based entity is a paradox, with the majority of its website traffic originating from Angola, Venezuela, and Brazil. It operates as a multi-level marketing company, enticing affiliates with the allure of high returns. Yet, a concerning 10% fee is levied on all withdrawals. This, coupled with a lack of transparency, raises eyebrows. Its business model, eerily reminiscent of a Ponzi scheme, relies heavily on new investments to pay returns. But the question remains, how does X-Bonds generate its revenue? X-Bonds claims to engage in external revenue generation. But where's the proof? Despite its lofty promises, there's no evidence to back up these claims. The company's lack of transparency is a red flag, and reports of unpaid withdrawals suggest we're dealing with more than just empty promises. The address listed for the company is a mailbox, not a physical location. The truth is, X-Bonds appears to rely on new investments to pay returns. This unsustainable model is a classic hallmark of Ponzi schemes. It seems the reality of X-Bonds is far from the picture it paints. The allure of quick, high returns is tempting, but the dangers of Ponzi schemes and companies like X-Bonds are real. These entities operate under a shroud of secrecy, with no clear information about their ownership or management. They promise high returns and operate on a referral basis, recruiting new investors to pay off the old ones. This structure is inherently unstable and often results in significant losses for investors. The lack of transparency and the unsustainable return on investment are major red flags. So before you invest, ask yourself, is it worth the risk? Check the description and pinned comment to learn how to get your money back and book a free consultation with My Chargeback, our #1 rated chargeback company.